this shows year over year. Last year, we were at 1.674. We're at 1.648. We were at 1.214. We're at 1.127. But again, I think this is subject to change a little bit. We're at 792. We're at 818. We're at 720. We're at 736. So we're pretty darn close to where we were. So if you purchased between August 2021 and August 2022, don't have a panic attack. It's all good. Just hold on to your property a little bit longer and, don't sell while the prices are down. You'll be fine.
Yeah, I mean, this makes sense. And like, if you were purchasing inside that window, like you have to understand that like you absolutely bought the top. Like that was a high, right? So the market was putting in historical highs. And so for us to just go back down to what was a historical high when it set in a new high,
Yeah.
honestly, that's not the worst case scenario by any stretch of the imagination. All right, everybody, welcome back to the Canadian Real Estate Channel. I'm here with Emma Pace, my absolute favorite real estate agent on the planet. And today she's going to be talking to you about the Toronto market update. Emma, what's going on in Toronto?
Adam, I'm so happy when you're the guest host. I just absolutely love it. It's the best.
Let's go.
Toronto, I mean, I think anybody that's watching the market update is going to be like pretty excited about this month. Not that it's like overly exciting by any means, but I think they're going to be excited about this month. However, I do want to preface this video by saying just because you see short-term improvements doesn't mean that we're at the bottom of the market. Nobody still has any idea what the hell's going on, but we have seen some optimism in the numbers this month. So, keep your eyes peeled. We'll see kind of how things continue to progress. I think everybody kind of had their hopes up that we were going to get this rate hike on the 7th and, have some confidence that that might have been the last one. But the most important thing when the Bank of Canada makes these rate announcements, I think more so than the rate itself, is the last sentence in the press release for the sentiment of the next one and how that is going to affect the market going forward. I think everybody had this idea of like, hey, yeah, we know rates are going up, but I was kind of hoping that the last sentence would be like, we're not going up any further, but they said, don't expect this to be the last one, people. So, we had some optimism. I don't know if that's going to continue in the market, but we'll see.
Yeah, I mean, I would put at least a toonie on the rates going up again for the before the end of the year. So
Yeah,
probably
I'd
that's
put more
happening.
than a toonie on that. I think I don't think they're posturing. I think they're going to continue to do it. And they just released the inflation numbers in the States today, so it was 8.3%. So we're coming down, but not as quickly as had hoped. So I think we'll probably see another rate hike.
Yeah,
So
absolutely. I would say the macroeconomic situation is perfectly positioned for more rate increases and generally speaking, more uncertainty in the market, perhaps some unemployment, perhaps some issues with supply chains as we head into the winter and
yeah.
what will undoubtedly be an interesting winter with what's going on in Europe as well as the American economy.
Yeah, 100%. So let's look at the numbers in Toronto, but I kind of feel the same way. Like, I think we're probably gonna, and we'll look at kind of what we usually expect in the fall market. But I think that we'll probably see a bump up in terms of overall sales activity. I think maybe we might see a little bit of stabilization in terms of price. Now, with that being said, I don't know if we're necessarily going to trade sideways. I think we'll probably still see prices slide a little bit. I just don't think that they're going to be at the drastic rate that we had seen earlier this year. And then we'll see kind of what happens in November and December. And 2023 brings a new year for us, folks. So we'll see what 2023 brings. But yeah, let's look at the numbers for let's look at the numbers. Actually, before we get into the numbers, for anybody that's watching, these are kind of the two things that most of our network has been finding value in, that our team's been doing. So first things first is we do send out an investment condo of the week. So we professionally analyze those every single week and we send them out to our investors. So if you're looking to buy, definitely get on that list. Or if you're just looking to kind of see the trends of what we think is decent cash flow at any given time, that's a great just kind of quick touch point to check the temperature of how the Toronto condo market is performing and what you can kind of expect from a cash outflow perspective. And I'll show you guys an example at the end of the video of what that kind of looks like. And then the second thing is we also send out a motivated sellers list. So if you're an investor, get on the first one. If you're an investor or an end user, you can sign up for the motivated sellers list. I'm going to link two links in the description below for you guys to be able to sign up to one or both of them if you want. But every other week we send out a motivated sellers list. So that way you guys can just, again, kind of check the temperature, see if there's anything in there that you're like, oh, this is interesting. I know that the likelihood of me being able to purchase that at or below that list price, maybe even significantly below that list price. That's just a very quick, some low hanging fruit to find some deals in today's market. So we like to send those out to our list. If you guys want to get on them, like I said, the link or links, if you want to get on both of them, will be in the description for you guys below. So let's get to the market activity. Haven't seen this page look colorful in a long time. It's been a sea of red for many, many months. So what I like to do, just so you know when we're looking at this, Adam, I really focus on this side of things. This, if we look at this entire graph, is year over year. Right side is month over month. If the market performance is within a 1% gap on either side, I usually say that's relatively flat, so I'll highlight it in yellow. If we move to the downside more than 1%, I'll highlight it in red. And if we move to the upside more than 1%, then I'll highlight it in green. So if we look at condo prices, they stayed pretty flat from July to August. So we went down almost 1%. Average price was, 744, went to 736. Not a huge change in terms of overall price there. Condo towns. I am watching condo towns very closely because we actually saw for the entire year they were hovering within this channel of 9 to 975. We did not break 9 to the downside for many months. It was just July. And then all of a sudden we went July, boom, we broke, and now we're down to 818. So we saw a 4% price decline. Now, I am going to show you guys something in a second because I do think that these two segments of the market, semis and condo townhouses, the numbers can be somewhat skewed because they don't have as much volume in terms of total number of trades that happen as condos and detached do. So I actually think condos and detached prices are probably slightly more accurate than condos, towns and semis on a month-to-month basis, but I'll show you why in a second. Semis, again, yeah, they look bad. 11% in 1 month. If you look at this, you're like, damn, that looks bad. But we usually only see or recently, we've only seen 30 on average semis that trade hands every week, right? So if we're looking at 100 sales across Toronto every single month, that's not a ton of volume. So this could be skewed if you have one huge sale or one super motivated seller that could pull that down in comparison to a couple thousand sales. Right. So again, I think these have some more room for variance just based on the fact that they don't have as many trades. And then detached prices, we actually went up. So we were at 1.5 and now we're at 1.65. So we made a pretty decent move to the upside. But again, not a ton of volume, but definitely more volume in the detached segment than semis. So the moral of the story is if you bought in August of 2021 or before, you're likely at par or you're probably pretty good. Average price point, just general rule of thumb, is we've probably pulled back to 12 months ago in terms of pricing. That's kind of the sentiment of the market. So this shows year over year. Last year we were at 1.674. We're at 1.648. We were at 1.214. We're at 1.127. But again, I think this This is subject to change a little bit. We're at 792, we're at 818, we're at 720, we're at 736. So we're pretty darn close to where we were. So if you purchased between August 2021 and August 2022, don't have a panic attack. It's all good. Just hold on to your property a little bit longer and, don't sell while the prices are down. You'll be fine.
Yeah, I mean, this makes sense, and like if you were purchasing inside that window, like you have to understand that like you absolutely bought the top. Like that was a high, right? So the market was putting in historical highs, and so for us to just go back down to what was a historical high when it set in a new high,
Yeah.
honestly, that's not the worst case scenario by any stretch of the imagination.
I think, if you're newer to the real estate game, and I guess we're technically newer too. I mean, I'm 7 years in real estate, so I'm not brand new. But if you're newer in real estate and you're expecting that the market's just constantly going to go up, and I have this conversation with agents all the time because there's so many agents that got their real estate license because they're like, oh well, I can make some sales because the market has this like the market had the inherent urgency that a lot of these newer agents just wanted. They were like, oh, well, everybody's already urgent. I might as well just be here and I can get some sales done. That's not here anymore. So if you're a real estate agent and you're watching this, you better be damn good at your job. If you're actually trying to help people to accomplish what they're looking to do, you better be damn good at your job in today's industry because people need the right advice more so now than ever. And to the people that did purchase in the last 12 months, real estate doesn't constantly go up. There's a saying that real estate is a yo-yo on an escalator, right? So it goes up and down on the way up over time. If you look at graphs, that's typically what it looks like. So if you had the intention of making 100 or 200 grand in 1 year of owning your property, like some people had the luxury of over the last few years, that's not the case. That's actually not normal. We've just kind of got used to it because the media headlines and things were crazy over the last couple of years. It's not really that normal. But real estate's a long-term plan. And I feel very confident that if you bought your property in February of 2022 and you keep it until February 2046, you're probably going to be okay.
Yeah, like if the world doesn't completely shut down, then absolutely this is all about time in the market, right? And it is very hard to time a market. And I think way too often in an amateur view of this is that it does just always go up. And it's like, well, yeah, it does, but at what time frame? Like what are we looking at?
Yeah.
And I think that's where that yo-yo analogy is absolutely perfect because it really is quite naive to think that you could just buy any given property at any given time and make six figures on a flip or something like that, or even just by holding it
Yeah.
and speculating, at any given time. It's not likely to happen. And so this is where I think on this channel, a big focus has been returning to the fundamentals, right? I mean, we have to invest with strong fundamentals and a great power team right now, or otherwise you do risk purchasing the wrong building, or you maybe the right building, but at the wrong time. And if you're unable to hold it for time in the market,
Yeah.
that's where I think real risk exists.
And I agree with you, man. I think people got lazy over the last couple of years. Like they were just like, whatever, I'll buy anything and I'll be fine. When really that's never a good strategy, guys. Like you get, I hate to use the word blessed, but you got kind of blessed by the market over the last little while. Great investors look at the fundamentals of what it is, what they want to do long term. They build a great team. They assess their risk. They don't just shell out capital and just pray for the best. I think everybody, some people got lucky over the last couple of years. But with that being said, there's some really good opportunities to buy stuff right now. Significantly more than what we had seen in the last 12 months. It's not begging somebody to buy their house anymore. It used to be you and 30 other people that show up to the door like, "Hey man, can you take my take my deal, please? Like I'll do whatever it takes," right? And I've had this conversation on this channel and a couple other podcasts, but in February, people were willing to pay a 10 out of 10 price for 3 out of 10 things on their wish list. They were willing to pay top price and sacrifice a ton of things. And now you can probably pay we'll say 7.5 out of 10 because the market has actually come down about 25%. So we'll say 7.5%, 7.5 out of 10 price, and you're probably getting 10 out of 10 things on your wish list. So that has flipped, but you have the fear and uncertainty that is in the marketplace from a market sentiment perspective, which is why people are just not as aggressive on it.
Yeah, and I think that totally makes sense. And we're entering, what some might look at it as a buyer's market. And so anybody that has the liquidity, now is the time to either seek out, better prices or better terms. Like we always talk about, right? We've always been in search of creative financing
Yeah.
or, better terms, like maybe vacancy is a thing you'd be digging hard for right now, or even just speed to closing so that you could begin filling them with these high rents. And I think that that's what we need to focus on, right? Is again, the fundamentals of like, what is going to make this a great deal? And then I don't think anybody should be particularly afraid to jump on a great deal at this point. Like a great deal is a great deal in any market. And so
Yeah.
while we can't predict the future, there is a chance for this market to go lower, of course. And in
Yeah,
fact,
and I think
maybe
to
it
your
should,
point,
but
you made a couple really good kind like when you talk about negotiating chips and things that you can, I think people still have this kind of like bull market PTSD where they're scared to like ask for things. Don't be scared to ask for things in today's market. Like I'll tell you guys a couple of very recent examples, like as recent as 2 days ago, right? So clients of mine wanted to go see this property that was listed kind of for sale by owner. It's called a mirror posting. So for anybody that doesn't know what a mirror posting is, it's you take your listing, you go to a brokerage, there's a form that you can fill out, you pay them a flat fee, and they merely post it on MLS for you. So that's all they do, right? And so a lot of agents, if you're an agent, this is like a sick little hack for you. A lot of agents will, I'm not saying this is right, I'm just saying this is true. They will opt to not try and show those properties to their clients. Again, not saying it's right. I'm just saying that it's just the facts of what it is. It's very wrong. So my clients want to go see this. I'm like super pumped about it because I already know there's very few showings in today's market, and the likelihood that a for sale by owner mirror posting that's offering less than industry standard commission, they were only offering 2% instead of 2.5%. If you're a seller, that's a bad strategy right now, by the way. Don't offer the people that have the buyers less money than everybody else on the market. It's not a good strategy to get showings in an already difficult market. So this listing was listed by the sellers directly, which agents don't like dealing with because you have to do twice as much work at the end of the day. For the most part, you're dealing with the buyers and the sellers, and you're getting paid less than what you would be to just deal with your own clients on any other traditional listing. And they're offering me less money. So most agents would just try to encourage their clients like this isn't a great deal because of X, and it was overpriced. So these sellers were not doing a great job. I was able to go in. We purchased the property. I can't say the price because it's still conditional right now, but we purchased the property for what would it have been $45,000 under asking, and this is a condo, so that's a significant amount off, right? Um, and I just said to them, my buyers, we work for full commission. Like we do a good job. We're a full service team. My buyers are not paying me. You're going to have to pay me the 2.5. And what do? They were like, okay, sure. You're the only person who's brought me an offer. We're working with your offer. Nobody else has even shown the property. So if you're an investor, you've got to take into consideration all the things that Adam just said, right? Asking for vacancies, 2021, probably couldn't do it. September 2022, ask. VTBs, ask. If you're an end user, the condition of the sale of your home, if you're a buyer, yeah, I'll buy your house, but I need a condition on there to let me to sell my house. That exists like a lot right now. Don't be afraid to ask for things because people are more willing to work with you in today's market than they've ever been. People want to put a deal together. It's very difficult to get a deal together today. Okay. And then one other thing that I was going to say to you guys, I almost just lost my train of thought. It's going to come back to me. So let's go back to the numbers and it'll come back to me. So, this is what I was talking about before. So I track this every week, Adam. So, we're on week 30. We're on week 37 right now. So we're up to week 36 for the numbers that have come out. So I literally tracked 2019, 2020, 2021, 2022. So I can see what usually happens week over week from a volume perspective. And if there's anybody that's actually interested in this like super nerdy thing, I do a 5-minute market update every week to just kind of go through these numbers. But this is what I was talking about, why numbers can be skewed and move in such large increments on a month over month basis, because you only have 26 semis that sold last week. So if you only have 26, there could be one or two, there could be one massive one that sells, or one massively motivated seller that just completely discounts their price, and that could skew the number. So you also have to know that volume plays a big part in terms of overall pricing. And there's going to be certain segments of the market, like attached properties. So this would be like a townhouse without maintenance fees. Semi-detached and condo townhouses are going to have lower volume than detached properties and condos.
Yeah, that adds up. That's I've got a degree in international business management. Part of that is stats, right? And that would be a statistically insignificant sample size, right? So you do have to
Yes.
be aware of that type of impact that any one deal could have on that, especially the one category there you showed with 11. That's rough. So
Yeah, I mean,
you got to be careful with that. Or sorry, 9.
with
I was
9.
looking at 111, but
Now
9 is
understand that
small.
this is weekly, right? So you do have to compound this. You
Yep.
have to say, okay, well, this 4 weeks on like an average would be the month, but you're still looking at what
Yeah, I mean, like
you
36. We're only
50
looking about
sales, something like that.
36 sales there, and then
Yeah.
yeah, exactly, another like 100 for semis. So like,
Yeah.
holy,
Yeah, so it's again, it's I think the numbers, you can't just look at the one number, because it could be easy to skew some of these numbers, but I think it's important that you know which ones could be more easily like manipulated, and that's why sometimes you see semis will move all over the place, and people are like, "Wow, it's really volatile," and you're like, there's just like not really a ton of volume. It's very statistically insignificant is a great way to put it. So if we look at regions, again, we got like quite a bit of a mix. We have seen kind of red across the board over the last couple months if you've been watching the market update. So Durham actually hit 900K, and then we bounced up to 920. So it's up about 2% month over month. Peel pretty flat. We were at 1,066,000 and now we're at 1,062,000. Halton went down by just over 3.5%. So we're at 1.25 to 1.2. Toronto is up. Again, Toronto looks really low, but that's because a bunch of the average price point is condo volume that's been moving. So 1.2% we moved up, and then York was flat again. So for the most part, probably the most stability that we've seen on a month over month basis in a long time. Not like a ton of movement one way or the other. It's not like we're seeing 10% drops here, which is nice to see. But again, similarly to what I said at the beginning of this video, you can't base your whole concept or judgments on what's happening in the market just off of 1 month, because we saw a bunch of months in a row where we slid down. We've seen some stability. Maybe we go up, but you have to watch what happens over the longer term. And I think until we see some stability with interest rates here, we're probably going to continue to see prices slide. They just might not be as drastic as what we had seen previously. And then to give you guys kind of a little bit of a market check on where we are from peak to current, which is it's actually interesting, because if you look at any of these news articles, I think there was one that came out from TD or something last week where they had said we're projecting a 25% price drop, right, from the peak. And I'm like, okay, well, if you actually look at the numbers for a lot of places, like we're almost there. So oftentimes they are not right with their predictions, if you actually look back historically. But if their prediction is right this time, I know they're talking about the average Canadian home, but Durham, we are down 25% from the peak. It was 1.23 February. It's 920 now. Peel was at 1.3. We're at 1.62. So we're down about 20% almost. Halton was 1.5. We're down to 1.2. So 21%. And then Toronto, we're at 1.2 to 1,031,000. So 15%. Almost, right? So those are some decent pullbacks at the end of the day. And then if we look Toronto specifically, we basically went from 822, which was the condo price in February, to 736. So 10% drop for condos. Condo towns, like I said, got to 975. We're at 818. So we're at 16. Semis were at 1.5. right now at 1.12, so 25%, and then detached we're at 2 million to 1.6, so we're 20. So, you know, and I was the guest host last month for the Canadian Real Estate Channel. So you could probably also speak to this, Adam. It's like Toronto and the GTA are not the only places that are seeing this. I think my average for last month was about 25% from the peak, kind of across the board with Hamilton, Barrie, Windsor, Sarnia. We did a bunch of them.
Yep, absolutely. It's across the board. And even if you just look, at the Ontario average, you'll see that that's basically been the case as well. And almost everything seems to want to retrace back to, 1 to 2 years ago. So it's not, again, I don't find this as shocking. I mean, we've been talking on this channel about this for a long time, that we are probably at or near the peak, and that, more than likely with the economics that are going on around the world, we were prepared to see this type of retracing. And, I just hope people can take this data now and start to comb through the listings and available supply that's out there, and be able to, again, structure those good deals where we're either getting a good price or a good set of terms that allow us to get in the market. All the
Yeah,
money's made during these types of economic cycles.
that actually brings me to the point that I forgot when we were chatting earlier, and that is we were speaking about deals popping up with numbers that were similar to when we actually first met. Because I first met Adam when I had purchased a wholesale property off of him, and that was kind of around the time on this channel. It's been a while since we've been kind of integrated with this channel, but the 1% rule was something that everybody was gunning for, right? Around Ontario. And then that very quickly over the last couple years became a thing of the past. It was like this ghost number, like, oh, 1% rule. And now, we were chatting about it. It's like, if you find a great deal in today's market, like the 1% rule is not that crazy to expect that you could get right now. The
I, I
interest rates
closed
are higher.
I closed a 1% deal. I'm talking 8 days ago. Okay, guys. So it is, but it's starting to really be buying season. And one thing that we've unpacked as well in some of the other market updates is that, the idea of just raw seasonality, right? There just is better seasonality coming for you in September, October, and things like that. So right now, if we're seeing, a lack of attention on some of these listings, this is potentially a great time to buy. I
Yeah.
mean, there still could be downward movement, but the local prices should probably go up, just on the account of seasonality. If this year or these months coming are anything like the entire charts that are behind us, then the next coming months will likely be more expensive to buy, but just on sheer demand, right? Most
Yeah.
people like to buy right now and then set it up so they're avoiding winter.
Yeah, so that's actually a great segue to the next part of this presentation because I want to go through the important metrics and I actually have a seasonality chart to go through. So that's awesome. To give you guys kind of an update on where we're at for residential listings. Again, anybody that likes to read about, anybody that likes to actually read long blog posts and read graphs, this guy right here, you should definitely check him out. Zealand, he does a monthly blog post and it's just all about Toronto's economics in and outside of the real estate market. It's primarily about the real estate market, but I will plug him. Never even met him, but love his stuff. So you should check him out. But as you can see here, we're starting to see this blue line here, our total number of residential listings. And my kind of theory behind this drastic decline was a bunch of people had listed in February, March, April, and they're usually on 90-day contracts. So they all had the expectation that they were getting peak pricing. They left it on the market for 90 days, then they expire, they take them off. All of a sudden we see this drop off in terms of inventory because a bunch of sellers were like, I still have my job. Unemployment is still very low. People can still technically afford their payments, but they just don't want to sell their home at a discount right now. So we just don't have a lot on the market, which is why you have seen 25-year lows in total number of sales that have happened, right? So we've seen this pop down a little bit. I am expecting that we'll see this pop up over the next couple of weeks and then fall again. Like if you look, actually, he's got September 2020 right here and September 2021. So you can see usually September and October, you get a little bit of a bump up. and then you've got it here. This is summer, it bumps up again, and then it falls off the face of the earth. And then like November falls off the face of the earth. So I suspect we'll probably see a similar thing this year. It might not be, exactly in alignment with that, but probably following somewhere pretty closely. And then months of inventory as of the end of August, we actually it was kind of sideways, to be honest, from July to August. We kind of hovered within like this 3.5 to 3.7 months for condos and 3 to 3.1. So not a huge amount of movement over that last month. But if you actually look at the end, this is actually from Zealand as well. So if you actually look, this has dropped down a little bit. It looks like we're getting back into a seller's market. If I showed you this in solidarity, I could make an argument to say that, oh, we're going back to a seller's market. Don't be fooled. I don't think that that's the case. And if we look this way, you can see that we're trending more towards, we're in a balanced market here because we're actually having more sales to new listings that have happened. So we'll look at that number in a second, which is here. So we saw new sales that had popped up to total sales in any given month. These dropped to like really low. 39%. The likelihood that you're listing your home and getting it sold is not looking too good for you at those numbers. And so we did see these increase. But I think that was also high probability that we just had a very low inventory. So you kind of had slim pickings. If you were buying something, you didn't have a whole heck of a lot to choose from. So I assume that that's probably, a little bit of the reason why we saw that uptick in August. And then this is what I wanted to show you guys about kind of overall seasonality. And this is the last, so this is 2019, 2020, 2021, and 2022. What you'll usually see is June, and basically June to August. This is sales volume, not prices. This is just how many sales actually happen. So you see a pretty decent drop off here. And we kind of saw the same thing. We saw a little bit of an uptick in August, which is interesting. And this doesn't count because we're in September right now. But normally what we'll see is, June, July, August, and then September comes back around. We bounce up until the end of October in terms of activity, and then we fall off the face of the earth. And then what happens usually, and I'm curious to see what happens this year, but my biggest week of calls for people that are like, hey, can we do a consultation? Can we hop on a Zoom call, whatever? That's like right here, right? Everybody, I call them the New Year's buyers. They call you. They're like, my cousin bought a house last year and I was with them on Christmas and whatever, and I'm going to buy this year. And then all of a sudden you start to see market activity peak in, a January till basically the, spring market happens, and then we fall back off for the summer. And that's kind of the cycle. So I think at the time of this recording, we're second week of September. We probably have until the end of October. So what is that? 7-ish weeks approximately. You probably got 7 weeks of the next biggest selection of homes that are going to come for sale. And then after those 7 weeks, you're not going to have a ton of new stuff that hits the market historically, and probably even fewer this year. So if you're a buyer and you're watching this video, you want to get out to look at some homes. You don't have to buy them, but if you actually want to figure out what house you want to buy, you should probably look at some houses in the next 7 weeks and figure out what type of house you want, because you're probably not going to have a lot here and a lot here. And we don't know what the market is going to look like by the time we get here. We don't know what rates are going to look like by the time we get here. So if you don't know what type of house you want, you could be starting here by the time the house that you really like pops up and you start your search, and here is where you buy. Start your search early. Go browse, see some stuff, figure out what house it is you want, so that when that house pops up, you know what it is, and that might be here. So you can beat the market.
Yeah, I would say that right now is perhaps the best possible time to be reconnecting. If you're out of touch, get connected with your mortgage agents, get connected with your real estate agents, get connected with your real estate lawyer. Make sure you've got that lined up. Start getting more liquid, right? If that's an option for you, like this would be the time to pull your liquidity and make sure you start seasoning that capital so that we can start actually getting, we want mortgages approved. We want to be pre-approved. We want to be pre-qualified. We want to be ready to go when we start getting into that market. Because when you see that supply tick up, like it's also a time like what we were just looking at was sales volume, which means a lot of people are buying. So there may be more supply coming onto the market, but there's also a lot of demand. So, you have to be aware of that and make yourself competitive as we lean into those markets that are on the green side, right? If we're on the green
Yeah.
side for sales volume, that means people are transacting. So if you want to
Yeah.
be one of those people, you better have your power team and your cash lined up.
Yeah, and I think that's a really good point. Whether you're investor or end user, to Adam's point, because rates are changing so drastically right now and just so frequently, your pre-approval from 4 months ago doesn't count. If you got a pre-approval 4 months ago and you think that your situation has not changed and you've not talked to your mortgage broker, you might be in for a little bit of a surprise once you have a conversation with them. So if
Yeah.
you're actively in the marketplace, like your broker, you might want to book just a standing call with them for every 2 to 3 months now to just do a 5 minute touch point. Like, hey, where am I at now? Given rates, where am I at now? Given rates, right? They can plug it in and let you know. But every time rates change, because we're past that stress test threshold now, your affordability does change. Every time rates go up, your affordability goes down now. You're not under that stress test threshold, which is uh jumble of words to say. Barely get it out there. But
Well, yeah, I mean, the thing to consider, guys, is whenever we go up about 1%, we're talking about roughly $50 per $100,000 on your purchase price and or on your loan amount. So all of a sudden, we have to you have to consider that, right? Because if you were just barely qualifying, maybe now you're out, and so we need to. That's maybe not the end of the world. It just tells you what you can afford, so that you can spend your time selecting the right assets instead of wasting the time of everybody if you can't actually afford to get the mortgage for it. So,
yeah, I mean, it could be the difference of you like if I'm thinking about condo buyers right now,
yeah,
if you're like in the entry level, like, or it doesn't even have to be condo buyers, but if you're an entry level, like first time buyer and you're like, I'm just kind of scraping to get into the lowest entry level price point of my market, and you're there, whether that's 300, 500, whatever happens to be, and rates go up, that could be the one catalyst that all of a sudden,
yeah.
yes, prices come down. But if prices don't come down as quickly as your affordability goes down when these rates increase, you're out of the game. You missed your opportunity and it's over for you for now.
Well,
Not forever, but for now.
and I think one thing we have to realize too is real estate's a big ship. It takes a long turn. It takes a long time to turn big ships. So when the interest rate changes, it changes overnight, and so your affordability does. But the ship doesn't turn that fast, and
Yeah.
so it is possible to run into issues there. So Emma, I think these are all fantastic points. Is that all you had for the Toronto market update today?
Nope, I got you two more things. I'm going to
Let's
go through the
go.
condo stuff really quickly, and then we're going to go through the rental stuff because I think that's
Woo.
super interesting for any Toronto condo investors, and then we'll get it wrapped up. So sales volume, we actually had just over 1,000 condo sales in August, and this is Toronto proper, so anything kind of in this map here. So we're up 6.75%. Toronto West, we're 180 condo sales here with the average price being 652. So again, down 1.8%. Not a whole heck of a lot of movement there. Central, which is comprised primarily of CO1 and CO8. This is the most condo dense area downtown Toronto. 720 sales, average price 782, down 1.4%. So again, not a huge move. And then Toronto East, 127 sales, average price is 595. If we're talking about condo affordability in Toronto, the East is going to be your most affordable option at this point in time. And I'm going to talk about that for investors at the end. So we saw a little bit of a move to the downside. It's actually the biggest move to the downside for Toronto East, which was 3%. And then to narrow this down even further, these little rings are the most condo dense neighborhoods in Toronto. So CO1 and CO8 are the two main ones. This is I could add C14, but this is kind of like North York, so you're right on the line to be able to get like the subway line to get downtown. So CO1 average price is 788. It was 808 last month, so we're down 2.42%. CO8 was 675. We're up 784, so we're up 2.5%. So if you look at Toronto downtown combined, depending on volume, we're pretty flat. Like again, we were at 744 all across Toronto to 736. Its condo market has been pretty stable. And I think a big component of that is rents are through the roof. I read somewhere the other day the average 1-bedroom condo for rent in Toronto right now is 2,600. It's not an insignificant amount of money.
No.
So
Not once you stack condo fees, et cetera. So yeah,
yeah,
I mean that's definitely that's a good rent to be
yeah,
receiving if you're investing.
2,600. 2,600. So CO7 is up here. Average price point is 699, so 700K. W06, which is Mimico. So this is where I think it's interesting. A lot of people like Mimico because you're near the water, you've got the trails, the condos are newer, which are great, but you're still probably an hour commute downtown if you have to commute downtown. So to me, I think a lot of people originally were like, okay, well, I won't buy downtown. I'll go to Mimico because it's cheaper. Yes, it is $50,000 cheaper, but when you take into consideration what it's going to cost you to borrow $50,000 from the bank, I think it's about $500 per 100,000 or so right now, if I'm not mistaken. So
Yeah,
you
roughly
assume
that.
it costs you $250 a month, or you're saving $250 a month to buy out here, but you're also probably spending $250 a month at least for transit to get downtown. So you may be better off.
Plus you'll die at 50 years old from a heart attack from just being in traffic all day.
Yeah, exactly, exactly. And then EO9 under like sub 600 average price point. So if we're talking affordability, this is your pocket out here. And then this I thought was interesting because we talk month over month, but I want to actually track these things in quarters to see what the performance has been over the last 3 months. So I've highlighted in yellow, these are the two downtown areas. We were at 790, we went to 808, we came back to 790. So we're kind of even keel across the last quarter. We were 804, 765, 784. So again, up, down, up. These three areas, so not the core condo neighborhoods in Toronto, and I've been preaching this for a long time. If I could choose the core downtown, which is an option for many people right now, I will always take the core over any other areas. I'm not saying they're bad areas. I think there's some like really great areas, but if I could choose the core, I would. If you look at these other areas, we've had like a consistent slide in terms of prices over the last 3 months when the other ones have stabilized. Cool.
Yeah, I mean, location is it just
Location's
speaks for
everything.
itself, right? It insulates you from these types of big market movements because they're always in better demand.
Yeah. So this, I've been tracking this, I think since the second month I did this, and I think we're on month 19 or 20 now. Um, since February, we have consistently seen this is actually the lowest month over month increase, but usually $70 to $100 a month in an increase. So these are all condos that are 1 bedroom plus den on the waterfront. They have to have balcony and parking, and they have to be over 500 square feet just to keep the sample size reasonable. Like you can see, there's 84 here, 83. I just want to keep it even so we can make sure that we're tracking the proper metrics here. We were at 2738 was the average rental price. We're at basically $2,800 a month for a 1 bedroom plus den with parking right now is what you're looking at. And then if we look at just the average Toronto Metro like rent price, we're looking at basically $3,000 a month. So what I would encourage you to do if you are somebody who's on the fence of potentially purchasing a property and you're renting right now, you really got to look at the numbers to see what the differential is to own the thing versus to rent it. If your landlord, like you might have been in the same property for the last 5 years and you're way under this, but like if your landlord decides that they, similar to what Adam said, they want to get more liquid because they're looking for other opportunities and they've done well and they decide to sell, that gap and that delta of your current rent to where you're going is probably the biggest that I've seen since I've been in real estate. So I would encourage you, even if you're not actively looking to move, you probably should just take it into consideration in case somebody pulls that rug out from underneath you and says, I'm selling the condo that you live in. You got to look at what the differential would be for you to go rent something else at current market rents versus owning it. Because in some segments of the market, there really isn't that big of a gap. So if we look at that, and just to kind of wrap this up, I'll go back to this in a second, but a couple key considerations just to wrap up the video. Investors, we were talking about 1% rule. Like I know like most investors that watch this channel will be looking for that. 0.5% rule in Toronto. I've watched to see that for the last little while, and we were like really far away from it. There's some areas where we've actually seen that, which is this deal which we sent out last week. Purchase price was 530, right? Put the property taxes, and this is just for anybody that's signing up for the investors list. This is kind of a look of the analyzer that we'll send out every week, and then you get your cash flow options, right? So with this, you're looking at 2650 for rents. They cover the maintenance fees, and you're looking at 2,600 in rents for a $530,000 purchase price. All of your maintenance covered. You really don't need property management for the most part. I don't think that it's an expense that you need to pay for with a condo, but you're out of pocket $170 a month at current rates with 30-year amortization. So if you think about a strategy for getting a cash flowing condo in Toronto, this isn't that bad. A lot of people have paid like $400 or $500 a month out of pocket. So if we factor in that it's going to cost you $2,000 out of your pocket for the next, like, let's say 2 years, with being able to replace those tenants, we should be able to get you a cash flow positive condo. We just have to set aside a little bit of money on the front end to be able to kind of get you there. But you're purchasing these things at a pretty drastic discount, and the rents are quite high.
Yeah, and I mean, eventually, like we've talked about, it's time in the market, right? There's an opportunity for these things to appreciate, even again, if they just go back to 2021 highs.
Yeah.
Some of those numbers we were just talking about was upwards of 20%, right? So if you buy now and it goes up upwards of 20%
Yeah.
in the future, right? Maybe not next year, but in the future, I mean, spending a couple $1,000s a year to hold this building and having your tenants paying the bulk of it,
Yeah.
it could make a lot of sense financially if you can weather any storms that come in the short term.
Yeah, and I think to kind of cap that off, because there's all sorts of different investors that this channel is amazing because there's something for kind of everyone. Toronto condos are not for everyone. You know what I mean? Like, if you're just starting in your real estate investing journey and you want to do a bunch of work to the property and you want a ton of forced depreciation and all of that kind of stuff, Toronto condos really aren't going to be the right thing for you, because they're a really long-term play, but they're the most set it and forget it type of real estate investment you can have next to like private lending, I would say. You're not going to have a call with the roof leaking. Your foundation's not leaking. You pretty much have a 24/7 staff member, because if you have someone like, if you have a concierge there, you've got security on staff. So there's a lot of really good things about it, but you're not getting cash flow. So if you're somebody who's like, I am a high income earning person, I don't need the extra $400 or $500 a month. I just have some extra cash. I want to park it in a AAA location. I want AAA tenants. I don't want people to call me all the time. I don't want to deal with property management. I don't want to deal with repairs. And I'm down to spend $170 a month out of my pocket to just not have to deal with any of that. They're great. They're amazing. But if you're somebody who wants to be fixing shit up all the time and you want to make $1,000 a month in cash flow, it's not happening for you with Toronto condos. All right.
Yeah.
So last two things. So Scarborough Town Center, probably the highest rents to purchase price. End users, if you're looking like cost to own versus rent, 1-bedroom condos, like I said, 2,600 is probably what you're looking at for rents right now. To own, if you've got 20% down, you're probably looking at about $2,860 a month. So there could be a $250 gap between you owning the thing at a discount off of the peak price, or you renting the thing. And it's 100% interest or more interest than what you would have paid in February. So you choose the lesser of two evils at the end of the day. And then one last thing, just to cap it off again, short-term price increases or stability do not indicate anything for long term. So just continue to watch these trends. It's been a more positive month from a numbers perspective, but just 1 month doesn't indicate that we have hit the bottom or anything like that. It's just a positive month at the end of the day.
Nope, that totally adds up for me, and I 100% agree with the cash flow thing. Like, I guess my only word of caution here would be if it's your only investment, this could be a little bit scary if your tenants stop paying. So again, there's that piece of just make sure you're doing your homework. You've got the right power team. You've got great advisors on your team to tell you you know, and help you through that decision to make sure it's the right decision, right?
Yeah,
So
and you guys, to Adam's point there, keep your eyes peeled, because I actually just did a full training on how, like, my exact strategy to place tenants to help make sure that you're mitigating risk when you're placing your tenants without having to pay real estate agents or property managers thousands of dollars to place the tenants. I did a full training on exactly what I do step by step to place my tenants to make sure that that doesn't happen. That's coming out soon, so keep your eyes peeled for that.
awesome. Thanks again, Emma. And thank you for bringing all this value to the Canadian Real Estate Channel. We definitely appreciate it. And if you're still watching this at home, please subscribe so you guys can get up-to-date videos with these market updates. We're updating everything down the 401. So if you guys want to stay in touch and stay up to date with these numbers and tips, strategies, tactics, that's the only way to do it. Get subscribed, get on those notifications, and give Emma some freaking love. Shout out
Thanks,
Emma
Adam.
with the 6. Talk
Appreciate you,
soon.
man.